Thanks very much, Ash. So, Ash, just going back to David's session from earlier on, and I'm just going to get you up on the screen now to our audience. A question about avoiding claims. Can insurers typically avoid claims under non-payment trade credit policies?
Yeah, thanks, Dipesh. I mean, we've had a lot of questions along similar lines, exactly as you described. So I just wanted to touch upon a couple of things there. In typical non-payment trade credit insurance, insurers should be somewhat agnostic in terms of the reason for the non-payment. It's quite a different product, as David touched on earlier, from things like political risk insurance. That said, there are exclusions, and so you need to carefully look at your contracts as to exactly what the exclusions are. And what complicates this and makes it difficult to give a general answer is that different insurance policies are governed by different laws, and concepts like force majeure have different meanings under different laws. So it is difficult to give a general answer. However, we advise a lot of banks on these types of insurance policies, and we have received quite a lot of questions on this in the last week or so. And typically, we're not seeing provisions, exclusions, which would allow insurers to refuse to pay out on the basis of the current circumstances on the whole. There don't tend to be specific pandemic exclusions, and where there is force majeure wording, we think that it would be difficult for them to rely on. Our insurance team is shortly publishing a briefing on this, which will be uploaded to our portal, the details of which are on the slides. And I think, having spoken to a few insurers recently on the very question, the extent to which, even if insurers could point towards a force majeure exclusion, the insurers we've spoken to, some of the major players in this space, view it somewhat as an existential question, and David touched on this as well. They need the product to work in times of distress, otherwise clearly in the future people won't be buying it. So we hope that everything works out such that insurers will not seek to avoid claims on this basis. But as I say, it's very much a fact-specific scenario, and you do need to assess your exact policy wording with lawyers from the jurisdiction governing your policies.
Thank you very much, Ash. Just to our attendees, and we're going to carry this webinar on for the next 25 minutes or so until 11 a.m. UK time, just to answer quite a few of the questions, because there have been an awful lot of questions in the chat. So we're going to be expanding this out to all of our panelists. So if you can continue sending questions through, and Sean and I will be asking those to the rest of the panel over the next 25 minutes. But Ash, one more question for you from Thomas Laporte-Manny. Are lawyers recommending to now adopt new COVID-type clauses in any contract? And if so, how are they approaching this?
Yeah, thank you. It's a good question. I think it depends on the documents and the products and the areas concerned. We've seen from a general lending perspective, a lot of big companies looking at, in terms of when this crisis first started happening, and particularly as it came through Asia, multinationals were talking about adapting things like material adverse change clauses, maybe making some changes to their financial covenants, etc. And we have seen, as I say, a renewed focus on these types of exclusions in insurance policies in the trade credit and receivables purchase space. I must say, at the moment, there aren't a great deal of new transactions starting up, and so that won't be a surprise to many people on the tradecast. So I expect actually there will be certainly a lot more focus on pandemics, and given what a huge impact it's had on the entire globe. And so, I think that's something which will continue to play out, and we're just seeing the early stages of that at the moment. I mean, I think one thing we are seeing is, banks have already, some insurers, as David mentioned earlier, have already said that they will extend payment terms for differing periods almost automatically, although usually there is some caveat to that to say, for typically well-performing or generally well-performing companies, so those companies and counterparties that have performed well up until now. Query exactly what that means. I guess the devil's in the detail there, and we'll see how that plays out. But at least that's a specific change, hopefully, which will help things over the next month or two.
Thanks very much, Ash. We're now going to open up the final poll to our listeners. Apologies. It's a very simple yes/no answer. Do you think there is sufficient legal certainty about the use of e-signatures? It's one of the topics that we've seen asked quite a lot over the last few days. Okay, I'm going to share the results now. It's actually quite a lot of people say no. And Ash, obviously, I know you spoke about this in your presentation earlier, but do you have any further comments?
Yeah, I mean, I think, like I said, I think in the space of a very short time, the world has got a lot more up the curve in this respect than previously. Even though the laws in most jurisdictions have yet to change or improve, and Andre talked earlier about potential changes to things like the Bills of Exchange Act. So we expect there will be future legislative changes to make things clearer. But clearly, governments are focusing on other things right now. I think the base position is that, at least under English law, e-signatures should work typically. There are some doubts around negotiable instruments, as we've talked about before, and also difficulties sometimes with registrations and things like that. But generally speaking, e-signatures should work fine, whether you're using platforms like DocuSign or whether even you're affixing a signature yourself via PDF, or even typing in a signature and emailing saying that typing in of your name constitutes your signature. Under English law, that's typically fine. The challenge for trade in particular is that, clearly, as I said in my video, it's a global business, and there are different rules in different jurisdictions. I saw one of the questions or the comments from one of the participants talked about in France, assigning purchasing receivables in France. The rules in France are slightly more difficult than in the UK, for example. So, it definitely requires an analysis across the different jurisdictions. And I think it was interesting to see the responses were quite even there. I expected actually more people to say there was more uncertainty. So it's encouraging, and maybe that reflects the fact that even in the last 2 weeks, people have been speaking to their lawyers in-house and externally and getting more comfortable with using the technology, which has existed for some time. It's just we haven't really wholesale adopted it, as Andre said.